Okay, hi there, traders, and welcome to Trade the Structure. The morning jumpstart and US market recap from the overnight action. Again, we're coming into the Asian market session, so we want to place our bets and know where to place them coming into the action. So we'll run through the key levels. We'll start off with the Australian 200, the ASX 200. You can see the action yesterday was pretty much, popped up through as we expected, flushed through a level and then dumped into another level, flushed it out, retested it straight back up again. So very much a yo-yo at the market at the moment. I don't think people know whether up or down at the moment. There's reasons why you should be bearish. There could be reasons why you should be bullish. I'm more sitting on the bearish side, but the market's not showing that just at this stage. I think we're talking up interest rates, inflation, all that, but the market continues to go up, then reacts lower, then reacts back up. So you'll see that in just a moment on the US markets. So that's the action from overnight. We pushed up into the European session. We closed about here, 4 o'clock close for the ASX, popped up, found the resistance zone at 72.95. Okay, we had a big sort of drift lower. Things were not looking so great, and then that was just after the open of the US session. Open of the US session was around here, and we just started to drift back up again. So we're just flushing out both sides of the market. People are very much trading intraday. Okay, so they're getting short in here, and the news comes out, they're closing shorts and getting squeezed back out again. So it's not, to me, it's not like a massive move up or down. It's more over the longer term, the bigger time frames. It's more a sideways, but you're seeing intraday, you're getting markets popping down straight back up again, because people are not certain that they should be holding short, and then also not certain they should be holding long. As you can see, you're holding short there, you're great, then you get squeezed back out. If you're holding long here, you get squeezed back out. So it's very much a confused market, I'd say. So expecting today the market to pop up, flush, maybe retrace again. I mean, we could just pop up, flush, hold this level, and ramp because of the news out in the US. So we'll get over to just to quickly look at Hong Kong and the Nikkei, Hang Seng and the Nikkei. So that was a Hang Seng. This is after hours. So this is where the market closed at 6 a.m. and then popped after hours. And that was because of what happened in the US. So that's a CFD pricing. Whether we open, come back in, flush this level, 24,730, go back down. We'll just have to wait and see that open. It's in no man's land for me at the moment, but the trend up recently is up. The trend is up. So we look at the Nikkei. Nikkei the same, had a big base through here, then lifted, and then we lifted, continued to lift. We're on a 30-minute chart here. The action off these highs, it popped up into a zone. Okay, so there's sort of three areas which I've just marked up as a big zone that's some resistance area. Popped up, failed, found a bid again at 27,277 and lifted again. So very much we could be spiking in and probing into this area and then failing, or we could just sort of probe down, hold a high and low, and blast up and through. We'll wait and see what happens on the open. Dow. So this was the opening action, coming from the European session, headed south all the way down. This is around 6 o'clock, 6 a.m. Sydney time, before we lifted. Now, it comes after the FOMC meeting minutes. Now, everyone's expecting them to be a bit more hawkish on interest rates. They're not. They keep coming out with the same thing, saying interest rates are okay. We're not so bad yet. Inflation's killing the market. It's killing retail. Retail sales come out last night. A lot bigger than expected, a lot higher than expected. So they're really brushing aside as much as they can for as long as they can. They're brushing aside inflation. And that was the reaction from the market, expecting to be a bit more hawkish on interest rates, meaning raise rates sooner, but they're talking up saying they're not too worried about it just yet, and then bang, market ramps up. So that was just, like I said, intraday, a big squeeze on shorts, okay? Shorts were in place, come into that, bang, squeeze out when they're on the wrong side of the action. Okay, it doesn't mean that we're going to continue to power higher just because we got the Fed there, but it does mean that, it's very skittish on the short side, and it's also skittish on the long side because you got Ukrainian issues. There was talk that the Russians have moved out. Then you see some other news articles saying, okay, they're still building up on the borders. So we really don't know. The news is never, it's going to be biased one way or the other. Different news services will say one thing, others will say another. So you're just going to be a bit open-minded to what you're reading, and just follow price action really. So there's concerns. There's still concerns of Russia, Ukraine, and there's concerns of inflation, but people are struggling to get a bit of a read on it at the moment. So for me, I would expect maybe we're going to be capped at this 35.052. I wouldn't expect, just because we've got that squeeze, that the market's going to blast off a night. It may flush through and then come back down like we did in the European session. US tech, we're still, we've had a bit of a base at 14,400, and then found some sellers at 14,635. So that was that push down, blast straight back up again. So it seems to be that the market wants to go higher. trying to continue that bull run, but they know they're up against it a bit. Higher cost of debt. It's whether this turns out to be a lower high, whether we blast up and through, and this is a move up. So you could easily have, if we show you this, that's the move up there. If I, all right, if I can get that, and that we could be, targeting up towards and through 14,830, or whether this is going to be some sort of lower high and just start to creep down off it again tonight, because inflation's hanging around. Unlike the Fed wants, the inflation rate is 7 or 8%. They've got to do something about it sooner or later. Otherwise, it's going to get out of hand. All the numbers coming out are not backing up the Fed's stance, really. They're coming out more inflationary, a lot more inflation than we expected. They're beating analyst expectations, yet the Fed is still standing around twiddling their thumbs. I'm not sure what they're exactly after. Maybe a very low unemployment rate before they're willing to pull the trigger on interest rate rises, but we'll have to wait and see. Germany. Now, sorry, yep, Germany. So in Europe, we'll start off with the UK. In Europe, we had inflationary numbers out in the UK as well. So that was sort of putting the cap on it at 76.30. The market popped down, and then the US, we lifted it back up once they were talking down inflation, once the FOMC said it's not so much of a concern to them. So not your old retail punter's got to pay more at the pump, pay more, anywhere. Inflation, lifting prices across the board, yet the Fed don't seem to think it's a concern. Obviously, a bit muffled about it, a bit concerned, but yeah, that's what the Fed's doing. That's what price action we're getting. 76.30, selling, potentially is lifting into that area. We found a bid at 75.68, so that's kind of rangy between there at the moment. You either want to see it lift and support a high low here and take off, or we want to see flush, lower highs come in and push our way down. So for now, we're just going to wait and see what happens tonight, what the market wants to do. Germany, the DAX found resistance around that 15,505. Now we put out a note prior to coming to the open, expected to flush. There was a little, you can see this kind of action was bullish. I didn't expect, that was kind of, for me, it's the start of the market rolling over. Okay, that is controlled buying. You don't really get controlled buying from retail. You get it from algos, you get it from, I don't know, buying into EDS. But the way I was looking at that was we should have seen a rollover from that. You should have seen pretty much a lower high work into it. But I was looking for that flush in the 15,505, which pretty much played out nicely on the open. Yep, open to the index, straight back down again, and then the US pump into the close. So for me, it's still support at 15,344. Any spikes getting sold into as well. So it's not a great look for the bulls. It's not really that good. So we'll wait and see what tonight brings us. If there's going to be another spike at that 15.05. For me, we're mid-range at the moment, so I wouldn't be trading this intraday. I wouldn't be trading it up until 7 o'clock Sydney time tonight, up until that's when the DAX opens, and see what they give us. Just looking at that, you've got nice little resistance support coming through here. So we may flush through this level. We may flush into it, hold again. Never know. Okay, gold, over to the commodities now. We've got okay, we've got that gold. I would expect the way this is going to expect that was a bit of a flush, and then we will drop. But the way this, two-legged move down, if you see this kind of action there, it's an uncertain from the bears. If it was going to be bearish action, you just see a spike through lows, then you look for your lower high. But because we've got this kind of uncertain action on the way down, it's sort of in two moves, yeah, the market was going to hold. It was going to hold that 1850 area, held, just drove straight up and through 1860, straight up to the highs at 1873. Okay, so from here, trend is up. That most recent trend is up, but we're into an area again where we could easily fall over from here. So hopefully, if you're going to sell, hopefully we don't get this drive straight down. If we get this drive straight down, I'm finding that most of the time we get drive down, we start the base, we lift again. Okay, but if we get a lower high coming into play, something like this, that's a bit more bearish to me, and that may lead us to a bigger move down. But if we just get a straight drive down into a support zone or even into here, I'll be just waiting to see high lows build. So really, trend is up. If we can pop out through, hold this kind of action, and then go, consolidate and go, there's a good chance we're going to continue on up. But for now, we just have to wait and see what plays out in the next session, especially European. Wouldn't bother touching it around Asian market session. I think it's all going to happen in European markets and into the US markets especially. Crude dumped into that 95 zone. Now, like I said before, manipulated market. We had all analysts saying inventories are going to come out lower, going to come out weaker. Don't know where they get the data from because they're constantly wrong. I mean, they don't have much of a choice. They can always turn it off at the pump to cut off supply or increase supply depending on what they want to do. And it seems like they've increased supply. You've got the numbers coming out a lot better than expected. They come out very positive when they were expecting to be negative in the US inventory numbers, and knocked it on the head. So it was obviously unexpected a bit, and that was just a big squeeze on those buyers into that zone at 95.50. Now we've come down to 90.70. It depends whether we can start to get a buy. So we've got US inventory, and then we have the OPEC, which can easily go and cut it if they want. If they want it back up, they'll go and cut production and see it ramp back up, drift back up again. But at the moment, what we're dealing with is this sort of rangy action between 95 and 90.70. Okay, we wait and see if this selling gets squeezed and we get a bit of a bounce and we can start to build a base again around this area, or whether it sort of bounces and heads lower. Okay, flushes lower into that 88.60 level. So key level 88.60 and then 90.70 for now. And it's trading around that 97. Just wait to see what action plays out. So really, probably, if you want to see bullish, you want to see something like this hold and then go. You don't really want to see, action that goes up and straight back down again. All right, copper. Let's get on the copper, and we'll get our cryptos, and we'll finish it up there. So copper, yeah, ramped up. Now, this is the trend up. It's been broken. Lately, the market's been mucking around. These sorts of trend lines is obviously retail do it a lot. I do it a lot too. I'm not putting much emphasis on that. They can get broken, and then the market ramps again, and then you have to readjust it to something different. Maybe this is the case. So you take it from the low. That looks great until you have to readjust it until it holds up here and then ramps. So that sort of break there doesn't mean too much until it's proven with a lower high and some, a few lower highs at least. So the market could easily sort of chop around here, hold, do this, and go. If you want to be bearish and you were sort of respecting this trend line, then looking for something like that off the level. Okay. So for now, this action, we've got that 99.50 area, this zone through here. It's right there now. Is it going to hold up? It looks like from this little pop up, it wants to hold potentially, but it's back down into that level. So it needs to be bought back up from here and then break through that lower high at just over 100. Okay, this zone through here. If it doesn't, we start to hold another low in here. I'm banking on the fact that it's going to push down to lower levels. Okay, Bitcoin. I think the Bitcoin enthusiasts and crypto enthusiasts don't like to think that they follow the indices, but they are at the moment. Getting sold down as indices come down, bit of risk off, and then risk back on again. Intraday, risk off, risk on, risk off, risk on. That seems to be the markets at the moment, so that momentum. And we pop back up. So that's with that US pump as we pump up into the close after FOMC. Pop back up. Didn't trade into that 44.510 or 44.50, 500, sorry. Didn't get up there. We flushed that earlier, couldn't get up there. Sort of lower high. We're getting this sort of minor lower level. If you can see that just in here, which is somewhere around 44.390. It could easily sort of hold up here and then flush back up. It could just as easily hold a lower high and go down, but I think the market's not going to want to do too much until the US opens again. So it could I'll be just looking for a chop, to be honest. Don't really want to take a lower high. I mean, if you can take a lower high, push into this level, great. You just be wary that if it starts to reverse new at higher levels, slightly higher levels than that, then yeah, you want to be out quick. Okay. And it seems to be the same with Ethereum. Ethereum's ramped up into that on that US news. 3169 hit that resistance level and it's backing off at the moment. So it could just keep grinding its way down. May get some of the action, but you'll want to be trading off lower highs for shorts and some sort of high low for longs. All right, that's pretty much it at the moment, guys. As you can see, I very much believe it's an uncertain market at the moment. I'm a big believer that this new rate rise cycle is going to weigh on the indices. It's going to weigh on the market. Look, technically it should. When the market is so overcooked to the upside, is so stretched, so extended, you would think there's going to be some profit taking. But the way things are moving at the moment, it's a bit uncertain. We don't know whether to go long, go short. I think longer term, people are holding off and adding risk to the market. It's more intraday movements, and intraday are very skittish at the moment. They're heading south because of concerns about different things. One news gets released, bang, they all get back out. They all get squeezed back out in the markets, and it's the algos working markets over as well. Algos will trade and push and push and push until they can't push no more. Okay, and that's what you're sort of getting with these pumps, these sorts of things. Markets down, algos know there's a lot of room to move on the upside because you've got a lot of people stacked up. News comes out, news triggers them into action, and they just ramp. Okay, and you're getting these, and they are because you're getting these kind of moves with very little pullbacks. Okay, it's not really trading this kind of action. This is more your retail people position themselves. This is more algo action. algo just driving it, and everyone just getting screaming back out again. And the same what we got here. No real, pop through a level, as you can see. No real pop for a level, and then a higher low to work from. Normally, you would expect something like this to work from, but instead, they're just banging straight up. Okay, it's just massive squeezes, and it's squeezing both ways. If the market's sort of grinding high, you can squeeze down. All right, that's it for me, guys. Hope you enjoyed. Remember to leave us a like if you like what you hear, and join the community. Go to our website, www.tradethestructure.com, and then take a look around. A lot of free material. Jump on and join the group. All right, guys, we'll speak again tomorrow.